Top 5 DePIN coins to watch in 2025. Build to earn. In 2025, one of the most explosive yet underhyped trends in crypto is DePIN, Decentralized Physical Infrastructure networks. These are real-world systems being rebuilt by communities, using blockchain incentives instead of centralized control. DePIN networks cover everything from wireless signals to mapping, GPU compute, and vehicle data. They're replacing Web 2 infrastructure with tokenized, user-owned networks, and it's happening faster than most investors realize. Before we dive in, a quick disclaimer: crypto assets are high risk. You could lose all the money you invest. There is no consumer protection. This content is not financial advice. Always do your own research before investing. What makes DePIN unique is that the infrastructure is real: dash cams, GPUs, 5G antennas, electric vehicles, all connected to the blockchain. And every time those assets do work, someone earns crypto. Let's dive into the top 5 DePIN coins to watch this cycle, starting with the OG of decentralized wireless, Helium, HNT. Helium is a decentralized wireless network built on user-owned hotspots. It powers IoT devices and 5G mobile coverage, now deployed in over 170 countries with more than 1 million nodes. Helium recently migrated to Solana for speed and scalability. Its ecosystem now includes Helium Mobile, a decentralized SIM provider, and 2 sub-tokens, Mobile and IoT. HNT is the backbone token. It's used for hotspot rewards, governance, and ecosystem growth. It also follows a burn and mint model that reduces supply as network usage grows. Analysts expect HNT to reach $5 to $10 in 2025 as Helium Mobile expands. If it becomes a major alternative to traditional carriers, targets of $15 to $20 are on the table. Next up is Render, RNDR, the GPU compute DePIN network. Render connects people who need GPU power, like AI developers and 3D artists, with people who have spare capacity. Render is trusted by Hollywood and the gaming industry. With the Octane Render engine and AI model support, it powers everything from graphics to large language models. RNDR is used to pay for compute jobs, reward GPU node operators, and steer governance. It's the fuel for a decentralized alternative to AWS for GPU workloads. If demand for decentralized AI compute grows, RNDR could reach $15 to $20 plus during the bull run. It's a key player in both the AI and DePIN narratives. Third is DIMO, a network that tokenizes vehicle data. Drivers connect their cars and earn tokens by sharing GPS, mileage, energy usage, and more. With integrations for Tesla, Ford, Toyota, and others, DIMO turns your car into a crypto-earning asset. Each car gets an on-chain NFT, and data is anonymized and sold to partners. DIMO tokens reward data contributions, power developer APIs, and upgrade vehicle NFTs. Users get paid for sharing, and developers pay to use the network. Analysts suggest DIMO could reach $1 to $2 if adoption grows. In the long run, if fleet managers and insurers rely on DIMO data, $5 plus is in play. Fourth on our list is Peaq, Peaq, a layer 1 built specifically for machines. It allows robots, EVs, drones, and other devices to register on-chain, earn income, and transact autonomously. Peaq is part of Polkadot but is multi-chain compatible. It's integrated with partners like Bosch, GaiaX, DIMO, and Fetch.ai for European smart city pilots. Peaq is used for gas, governance, staking, and machine registration. It powers a world where machines provide services and get paid without human input. Price targets for Peaq range from 50 cents to $1.50. If it becomes the default machine economy layer, long-term projections stretch to $3 to $5. Last but not least is Hivemapper, Honey, a decentralized Google Maps alternative. Drivers contribute dashcam footage, which is geotagged and converted into real-time map data. The Hivemapper network is already being used by logistics firms, drone companies, and governments. It pays contributors with Honey and updates its map daily. Honey is used for rewards, data access, bidding for coverage, and governance. Buyers pay in Honey to request specific areas or data layers. Analysts see Honey reaching 50 cents to $1 with expanded mapping campaigns. The long-term opportunity lies in mapping for autonomous vehicles and AI training. So to recap, Helium is wireless, Render is compute, DIMO is vehicles, Peaq is machines, and Hivemapper is maps. Together, they form the foundation of the decentralized infrastructure stack. Each project replaces a piece of traditional infrastructure with a user-owned, tokenized alternative, and offers crypto incentives for participation. For investors, look for deployed hardware, active usage, real-world demand, and clear token utility. Avoid high FDV ghost projects with no traction. The biggest tailwinds for DePIN in 2025. AI's hunger for data and compute, governments seeking smart city solutions, and the explosion of tokenized real-world services. If you want exposure, consider a diversified DePIN portfolio. HNT, RNDR, PEAQ, DIMO, and Honey each represent different layers. Risks include hardware logistics, liquidity for smaller tokens, and uncertain regulation. But the upside is massive, especially for early adopters. This is CryptoPulse. Deep dives, real insights, always objective. Subscribe for more DePIN, RWA, AI, and altcoin content daily. Subscribe to CryptoPulse for more in-depth crypto research, price breakdowns, and investor insights every day. Drop a comment below. Which of these AI projects are you watching in 2025?